All right. Well, let's get going. Welcome all to Community Capital Live. My name is Michael Schuman, and I am editor and publisher of the Main Street Journal. Community Capital Live is a bi-weekly set of discussions, webinars, presentations that tries to highlight the best of what's going on in the United States, and sometimes we'll go outside the United States in the universe of community capital innovations. And what we try to highlight are innovations that simultaneously are good for local economic development, but also good for social justice and remedying inequality and community distress. The goal of these workshops is really to inspire you to borrow, build, and use the material we share with you to maybe do similar initiatives in your own backyard. I guess our watchword is the antithesis of NIMBY, which is not in our backyard, but BIMBY. We'd like you to begin in our backyard. The sponsors of Community Capital Live are Main Street Journal, Neighborhood Economics, which has a big conference coming up in Asheville that I encourage you to think about going to, the American Independent Business Alliance, and Impact Alpha. And the panel that will be doing interviewing today will be myself, Kevin Jones from Neighborhood Economics, and Kevin is also the co-founder of SOCAP, and Jasmine Rogers from the Eagle Street Market in Asheville, North Carolina. Today's focus is on PVGrows, Pioneer Valley Grows, which is a local food fund in Western Massachusetts. And we have two people we're privileged to have a chat with about the fund today. One is John Waite, who is the Economic Development Director of the Franklin County Community Development Corporation, where he has served in that role since the year 2000. He has been involved in a variety of food and finance initiatives, and his background is in business. He has a business degree from the University of Massachusetts and a master's from Columbia. We also will hear from Hannah Sobel, who is the program manager for PVGrows, and she has a master's in urban and environmental planning and a MS in food policy from Tufts University. The I guess one place to begin is to me it is a great privilege to stand in for Joel Skeen, who normally from the Mindful Marketplace is moderating. Joel's on vacation today, but it's a great privilege for me to talk about PVGrows because I happen to be involved in this at the outset. And one of the things that we did, I'll leave it to John to explain all of the people involved in but more than 10 years ago, there was a decision to do some serious analysis of the food system and what were the opportunities for bringing new capital to bear. And John, I thought it would be useful for maybe you to just reflect a little bit on the origins of PVGrows.
Thanks, Michael, and thanks to everybody who put this together. I've been watching some of your past shows here, and I think it's some great opportunity to share some of this information with folks. So PVGrows, we've been around before 10 years, and the origin goes back to just in Western Mass. There's a lot of agriculture here. We have a lot of family farms. And so 15 or more years ago, we had a network of folks trying to support the farm and food businesses. And out of that larger group, they were both in the field, technical assistance on how to grow things better, but there was also a finance group. And then that finance group really realized that there was a need for capital if we wanted to support our farms. And, we've got the traditional sources, the Farm Credit East, and banks do a little bit, and some other ones that do real estate, but no one was really helping the small farms if they needed to, for hoop houses, for greenhouses, for tractors, for equipment as they started to grow, especially the know, we've got a fair number of younger farmers coming to the valley. We call this the Pioneer Valley here. So we set up a little trial fund with some foundations, and that seemed to go okay. And that's, I think, when we asked you, Michael, to come in and really do some more research, should we really get serious about this? And what we learned was, yes, there certainly was a need among farm and food businesses for capital, flexible capital. And then there was also, on the other side of the coin, was there's people out there who want to support farms in other ways than just buying local. We've got a great buy local organization here called CISA. Probably some of you know that, Community Involved in Sustaining Agriculture. They've been around for over 25 years. So buy local is like really just has flourished here, and there's a lot of people accept that as a way to support farms, but no one had really got into the investing. How can you do more than just buy local? So we realized, you know, there were people with money out here who wanted to support it. And you know, Michael, I still remember your research saying that there was at least 52 million. For some reason, I remember that number of capital out there in the community. You know, people who had excess money, maybe they had it invested in Wall Street or other places, but they would potentially invest it locally if they had a mechanism for it. And there was no mechanism. So that's really how we started PVGrows. A lot of ag-related organizations were part of this. And then we were really lucky to have 3 foundations who stepped up to the plate to help support us in the early years. One of them is the Solidago Foundation. Some of you know that, and Jeff Rosen was the main player there. The other is Lydia B. Stokes, and that's Tom Willits. And then the Kendall Foundation, which is around New England, Andy Kendall. So they helped support us in those early years as we developed the fund. And it's, you know, we did an offering memo and it sort of took off from there. And now 9 years later, we're still at it.
So, John, how much money was necessary at the outset to get this thing launched and off the ground?
You know, and this is where I want to say, you know, we built it as we went. So we didn't really know that at the time, and you know, we knew that a lot of the farm and food businesses, some of them needed $10,000 loans, some needed 50, some needed larger amounts, but we wanted to sort of stick with the, you know, the smaller, maybe $50,000 loans. So we knew we needed several, you know, we needed $1 million really to get going. And so the foundations put in some money, and then we also got some early investors from some financial advisors were able to send some of their folks to us. You know, the early investors were taking, I would say, you know, a fair amount of risk. They didn't know, you know, what was going to happen to this. We did have a small guarantee fund or a risk capital pool at the beginning, but that was only $100,000. So investors were at risk early on. But we were able to bring in the first over $1 million pretty quickly, and then grew it to $2.5 million within the first year and a half. So that really was enough to start basically as a revolving loan fund.
And it's worth maybe just taking a minute to tell people about the Pioneer Valley, what the size of it is, the contours of it. It's not, I mean, it's neither a tiny town, nor is it a big city. So what does it look like?
It's the Connecticut River Valley, basically, which, you know, a lot of times we sort of say Western Mass is an extension of Vermont. Rolling hills, Connecticut River goes right down the middle of it into Connecticut. We're located in Greenfield, which is in the northwestern part of Massachusetts. Northampton is the next biggest town, and then you go down to Springfield, which is, I think, the 3rd largest city in Massachusetts. So you've got rural, then sort of merging with urban. And this PVGrows group that was helping agriculture, it was from people from all over those 3 counties, because we knew that urban and rural go together. You might have larger farms up in the rural area, but we had small farms. We also wanted to do urban, you know, involve urban farming in this also. So we have most of our farms, there's a few that maybe have 200 acres, but probably most of them are more 50-acre type, a lot of vegetable farms. And then as we get into the hills, we've got more animal, cattle and things, but a lot of vegetable farmers down the Connecticut River. Very good soil. Connecticut River has some of the best soil in the world, we're told. Yet it's got one of the issues with farmers is they're often smaller, so they don't have huge tracts of land. And so they need to do more intensive farming. So that's when we talk about greenhouses, hoop houses, things like that, to try to a little more mechanization. So those are the kind of things that were keeping some of the farmers from growing and earning more revenue.
Great. So let's fast forward. So this has been operating for give or take a decade. Hannah, you've come to PVGrows more recently, and you sort of are privy to day-to-day operations. Tell us a little bit about just the contours of the fund, how big it is, how many businesses are involved, what's the nature of the businesses, the nature of the loans.
Mm-hmm. Yeah, so we provide loans to farmers and local food businesses, and they must demonstrate positive impact on the agricultural system, on the environment, and on their local community. These loans themselves are average about $24,000. Oh no, sorry, 60,000. 24 is our average investment. And they're for anything from equipment, infrastructure, working capital. We can also be part of financing for a bigger deal, such as for like land purchase or business purchase. But really it's for farmers as well as local food businesses that demonstrate, a significant impact on the local food system.
So, one of the things that I think is interesting about PVGrows is that you started off with accredited investors. So you have these anchor investors, big investors of some foundations, and then a little bit of public money, and then you brought in other bigger investors, but they weren't necessarily philanthropies. And then you decided to open it up for grassroots investors. So how many grassroots investors do you have now, and how easy or difficult has it been to get them involved?
That's been a really big thing about what we've been trying to do with the fund, is really trying to democratize capital. From the beginning, once we opened it up to non-accredited investors, that was the goal, is to make this be an opportunity for community members to have a greater impact on the local food system, more than just buying local for their household. And this was really the only opportunity that existed for people to actually invest in their local food system in our area. So now we have 99 investors. Those are the non-accredited investors. The average investment is $24,000. John sort of mentioned this before, but we previously had 3 investment pools. We now just have 1, so that there's more, that provides a greater amount of capital available to borrowers. But those are 3-year investment terms. Investors get a fixed interest rate annually. I think it's one of the exciting things about this fund. It's people who are excited about local food and their local food system at the outset. So this is just providing an opportunity for them to have a greater impact.
So I have more questions about how we can transform 100 investors into 10,000, but I'm going to hold that off for a second and hand it over to Kevin.
Well, thank you, Michael. This is really interesting. We've got a really strong farm-to-table food system here in Asheville, North Carolina. But we have really good technical assistance, and we just have a fund from the CDFI that's about 8.5%. I mean, it's nothing exciting. Farmers don't like it much. So what's your percentage of the standard loan? And then I want to go into the social impact pool later. And what interest rate do you charge, and what's your percentage of default, just to get that out of the way first? Maybe to Hannah, probably,
Sure.
since it's
Yeah.
operational.
Yeah, so our loan terms to borrowers, it's been pretty standard at about 7%.
Right. So
And I think
cheaper.
also one of the key parts about our lending program is that we lend to borrowers who aren't able to get capital from traditional sources. You know, maybe they don't have enough collateral for a bank, or the bank isn't able to offer flexible enough terms. So that's what, you know, Franklin County CDC does, you know, as a lender for all types of businesses. But, you know, just the PVGrows is that funding source exclusively for the local food system.
Right.
Yeah.
No, go ahead. What
Yeah.
is your default rate so far?
7%.
7% default
No,
rate.
no,
So
the
Oh,
default,
sorry.
your default rate.
a lot lower.
Oh, right. We've had one.
Yeah.
Okay. Well, that
Yeah.
7% seemed awfully high. Okay. Yeah.
Yeah.
Interesting. And
Yeah.
you've had a couple iterations and evolutions that I find interesting that I'd love to see here. You know, and it's interesting that this doesn't work everywhere. We were a really good social impact community is Greenville, South Carolina, but there is really no farm to table food system there that you could build this around. So, and Asheville is a relatively affluent island among some poorer counties. What's the demographics and the relative community affluence in your community?
Yeah, that's a good question. It's Franklin County, where we're located, which is the smallest, ruralist county of the 60 of the 15 in Massachusetts. Our population is 70,000, and we're the second lowest income county in the state. Springfield, Hamden County is the next lowest income, I think. The one in the middle with Northampton, it's the University of Massachusetts is there. It's a little more mixed income. So we are the lower income part of Massachusetts, which I know when you look around the country, you know, we're better than some other counties, but in the Northeast here, we're one of the lower income. But we do have pockets of, like every place, people with some wealth. And that's what we're trying to kind of merge, this whole democratizing capital. You want people who do have the wealth, they should be putting in 50, 100,000. People with less money, you know, we lowered it to $500, the minimum investment, because we want sort of your average family to be able to invest as well.
Right. And on the demand side, do you have a lot of farm to table restaurants that brag about we source from Hickory Nut Gap or whatever? That seems to be required to make this work.
Yeah, it's hard to find too many that don't do that almost. And again, I say that because of our buy local organization has been just terrific for the last, you know, 25 years. And and a lot of customers, you know, they ask also, they kind of look for, you know, not that they want necessarily the name of the chicken that they're eating, but they want to know, like, you know, what farm that's from, and that it's local. And including some of our not only restaurants, but some of our stores also. We have a few food co-ops here that really promote and buy a lot of local as well.
Right. So that's the social ecosystem that makes the loan fund work, really, and sets up the demand. That's pretty interesting. So we've got good technical assistance, but you've got a business assistance fund. Tell me about why you set that up, how much you charge, and how that works then different than just traditional technical assistance.
Well, I actually got to go backwards a little bit, because one of the what I believe is one of the successes of PVGrows is it didn't just start on its own. First of all, it had this group of supporters, other organizations related to farm and food. But then we decided to create PVGrows within the Franklin County Community Development Corporation. Franklin County CDC, this is our 45th year in operation. We've been working with small businesses for those 45 years. So we've had a loan program, we've had a business technical assistance program for all those years. And so this was sort of an add-on, and the way it's structured is it's a supporting organization. So you got to get your lawyer to help you set that up, but it was pretty easy. The staff of PVGrows is, like, Hannah's a Franklin County CDC staff. I'm a Franklin County CDC, but we work on the PVGrows. So PVGrows doesn't have any of its own staff. So the technical assistance comes from our other staff people here, as well as our partners. And I got to give a nod to the Fair Food Network. I see Joel here. They were involved early on too, and they put up some funds to provide technical assistance to our entrepreneurs and our farmers at the beginning as well. So that was a key part of it, is that we didn't just want to give capital. That's a huge need, but some people needed the technical assistance, the finances, the marketing to really use that capital, to their advantage.
And technical assistance, business assistance is pretty common, but a business assistance fund is not that typical. Tell me how that developed and how that works.
Well, as I said, so that's when we teamed up with Fair Food Network.
Yeah.
We told that they put some money up, and then the other partners, including CSIR and us, we put up some money, so it was kind of matching. That doesn't actually, it's not still going necessarily, but the Franklin County CDC has lots of other technical assistance resources, and our partners. We work with the Carrot Project, for example. I think a lot of folks know them. CISA, of course, who does a lot of buy local work, also supports that. And then we've, even on our committee, we have someone from the Mass Department of Agriculture. And the Department of Agriculture has a lot of training programs and some other grant programs as well. Right. So through this network, we're able to get people the resources, the technical assistance resources they can use.
Right. Okay. And then you've added this social impact pool. Tell me the reason for that and how it works. It's really low interest. I'm curious about how that works.
Yeah, so, as when the fund started, there were these 3 pools, one of which included a guarantee pool for investors. And, as the fund progressed, there weren't really any loan defaults. I said we've only had one that occurred just this past quarter. So there wasn't really as much of that need to provide this guarantee pool. And so, the decision to just have one, to consolidate the funds and roll them all over into one social impact pool, was just to have more capital available directly to the borrowers, to farmers. That said, we are considering other ways that we can have credit enhancements, whether that's another guarantee pool in the future, especially looking forward. We've been really good at lending generally to all farmers and local food businesses. But something that we're working on now is how we can better support farmers and business owners who are people of color or from under-resourced backgrounds. So, maybe that's a pool that's for credit enhancements. But, for now, that was the structure that we have here.
Right.
And also the 3-year term for investors, that gives them a little bit more flexibility also. And, I think that the lower interest rate kind of reflects that shorter term.
But you also made that available to non-accredited investors. What was the rationale behind it, and how has that broadened your reach into the community?
I think that's in the first round, we had what we call the Community Investment Fund, and that was for the smaller investors, the non-accredited, and that had that risk capital pool attached to it. But now that we think we're doing a good job collecting back on loans, we wanted to open the whole pool to folks. This gets back again to the beginning. We did not have to, we're sort of unregulated, I guess. Michael, you can tell us what the other words are for that. But because we're a nonprofit organization, we didn't have to go through the whole SEC accreditation. Although I will say that we did go through it because we want to meet that. But we don't have to. And one of the things that we don't have to do is take accredited investors. So we're able to take non-accredited. So the fact that we can, and that's democratizing capital, is what we wanted to do. We wanted to get more community members involved. I'll tell you, we haven't had that many of the smaller investors. And that is something that we really want to do, market it a little bit better, reach out to people more. Because I think just a lot of people still think, when they hear the word investors, they think people with money. So we're trying to overcome that image.
Yeah. Okay. Interesting. What percentage do you have coming in from donor advised funds or some of the new, really more democratic donor advised fund platforms like Catacap coming out of Impact Assets?
Yeah, I don't think that much. Some of Stakeholders Capital, who actually just joined up with another group. they've brought us a lot of folks. And then North Star Financial Management, I think out of Eastern Mass. They've brought us a bunch of folks, but I think we have to get better at the donor advised fund group.
Okay. All right. And Jasmine, can you, I know you've got some questions teed up too, our third partner from Eagle Market Streets.
Hi, so I feel like I have a little bit of a fun question for you guys. Both of you have impressive backgrounds in food systems and community development. Do you have any personal anecdotes or experiences or moments in working with this fund that really illustrate why you're passionate about food justice and investing in local economies?
You go first, Hannah. You've got good background.
That's a great question. Yeah, I mean, let's see. Well, so I feel like I've been in this role for just under a year, so I'm trying to think of, I've just learned so much in my interactions with the borrowers and the diversity of requests and the diversity of needs that they have. So, for example, we recently gave a loan to a woman who farms in conjunction with a community organization in Holyoke, Massachusetts, that serves the Latino population. And so they have this big community garden or community farm where she has a plot on that community farm. And she opened up we gave her funding to open up a food truck where she was going to sell her produce as well as serve food. And a couple of months ago, this community organization was having a jazz festival, and she was there to launch her food truck business. So it was really nice to show up and get to see her truck there, see both her farm and her food truck. And yeah, that was a lot of fun. And then also just, the diversity also of Massachusetts agriculture is really important and great to support. So something totally different is, we were approached for a loan from someone in Nantucket. And I'll note also, for our investors, it's good to have a little bit of a focus other than the fact that it's the farm and food system. Our focus is mostly in Western Massachusetts, but we do have 30% of the fund is available statewide. So that's why I'll mention that, the fact that we had a request coming from Nantucket, which is, the islands off of Massachusetts, for those of you who aren't familiar. And this involves someone who wanted to start a fisherman person co-op, and I learned about the term for a shanty was like the legal term for a place where you shucked seafood. So it's exciting that even though Massachusetts isn't known for its like vast production of agriculture, there's still an incredible diversity of what is happening here. So it's exciting to be a part of supporting that.
And I just tell you, I started my economic development work as a Peace Corps volunteer, and worked in both West and East Africa, and loved going out working with, and everybody there is growing something. That's the main occupation of a lot of people. And so you're walking through the fields with the folks, and then coming back here to Western Mass, that's what I've been doing with some of our borrowers. And I love going out and visiting them. And some of them you got to find, if it's in the season, you're out in the field with them, talking about what their capital needs are as they're looking at, how their production is going. And like Hannah says, you learn something new every day working with these folks. As one of the folks started harvesting the fiddlehead ferns early in the year, and watching them grow by the Connecticut River. It's a good area for them. So there's a new product for us. And I should also say that we have what we call the Western Mass Food Processing Center that we run here in Western Mass, and so we deal with a lot of food businesses that are actually producing things. And so some of our borrowers are actually you know, we might make a loan for a tractor or a hoop house or something, but then they're taking their harvest, they're bringing it to our food center and processing it and putting it into a jar and selling to the local co-op. So it's the whole food system in being involved from the growing to the buyer, you know, which is fantastic to see that whole system working.
I think one thing that's really interesting is, as you know, you were an early entrant in all of this, and you're inspiring other groups to enter, excuse me, into this as well. I just did some work in Cape Cod, where they've been paying very close attention to you. And if they are able to create a fund, well, then they can start covering Nantucket, and you then
Yep.
can focus your money more locally. And Massachusetts is not geographically a huge state, and I think that's a phenomenon that we're going to see as community funds start to emerge around the country. What I would like to do is just open the floor right now to others here. We're a small enough group that if you want to ask a question or make a comment, just raise your hand and I'll call you. I'm going to start with Nicole. And Nicole, you put in a comment, and it's been partially answered, but maybe the parts that haven't been answered you can restate.
Yes, thank you, Michael. And thanks, Hannah and John, for being here. It's really awesome to learn more about what you all are doing from yourselves. So thanks for organizing this. And my question was, what was the legal mechanism to include non-accredited investors? Which I think you, as Michael said, partly answered in the nonprofit status, but I guess because you did mention that you voluntarily went through this SEC process, how difficult was that? Any thoughts for that as people are trying to understand the nonprofit funding versus for-profit socially conscious businesses?
Yeah, it took over a year, I guess, to go through this with you know, the attorneys, and we actually did run it by the SEC people and got a lot of feedback. Again, I think it's again, it was much easier, and I would say that this is a core reason why we're pretty good, is because we had this core organization, the Franklin County CDC, and this was built on top of that, or next to it, I guess. Starting from scratch would be, I think, some more challenges involved. But you know, but because we had it, you know, we had our attorneys, so we were able to work with them to get through it. So our first offering memo took some time, and we've shared that with other folks. I think, Kevin, you were just mentioning Boston Impact and Ujima. You know, we've shared it with them, and then they use it and add to it. And then when we did our second offering 2 years ago, we went back to everybody that we could and borrowed it back again. And that's what this community should be doing, is just keep getting better and don't do all the, you know, Solidago and some of the foundations help pay for the lawyers to do our first offering memo. But we shouldn't have to do that again. You know, just keep building on what we have.
That is a great point. We've got to keep the lawyers to an absolute minimum and learn from one another. Tori, to you. Whoops, you are still muted.
Here we go. Thanks, Michael. What do you have somewhat of a competition among your farms with well-capitalized, larger, you know, agribusiness oriented, large volume farmers in your area or even out of the area? And how does that affect you know, the willingness or the success of more and more both farm borrowers coming to you as well as funders coming to you, as you know, to provide funds? I'm just saying from experience, because I've also worked in helping local food systems become more successful. That there's definitely a sort of a two-tiered agricultural sector of very small farms versus large, you know, non-organic oriented in, you know, large scale production. which the critical factor, and you've already mentioned, is the buy local awareness and the foodie awareness among your region to buy from local farms. I'm just wondering if what's the nature of that competition from, you know, corporate farming, let's call it.
Yeah, so as I said, we've got a variety here, and we've got a few farms that have a couple hundred acres, and they're, you know, the truck farmers, the ones that are selling wholesale, and most of them go to Farm Credit East or have bank relationships, and you know, we don't usually see them here. They might come to our food processing center to make something else. So we're kind of working with the smaller ones, but we do encourage even the smaller ones. You know, the Farm Service Agency, they have that $50,000, you know, Farm Start program or something, and Farm Credit East has some programs for the early stage ones. So we encourage people to go to them, especially at one point the FSA had 2% interest rates, I think, or something, you know, so that was helpful. But a lot of them can't get what they need because they're trying to do something extra. They don't have the collateral. You know, those folks still look for the traditional, you know, collateralized loans, and we do it based on cash flow. All of our loans here at the CDC, really, it's about cash flow. So that's why we want to provide the business assistance, so that we can help them with their finances, so that both them and us feel more comfortable about them taking on the debt.
Yeah.
And once in a while, we get a bigger farm coming to us because they want to do something separate. You know, they want to build a kitchen on the side of their farm, and Farm Credit East doesn't want to deal with that.
Is there a lot more room for your penetration to smaller farms, do you think, or have you captured sort of the majority of the income of that tier of the farming sector?
I think that, you know, maybe we're lucky here in Western Mass, but there's still more people starting farms, taking over. You know, there's the generational transfer as well on some farms. And so the younger people want to do something new and different. So we're seeing some of that. So I think we've still got a lot of, there's going to be some demand coming. And again, we do the food businesses, you know, we do restaurants. You know, banks don't tend to do restaurants. But if it's a restaurant that's serving a lot of local, we want to support that. So we do have a, you know, even though the portfolio is farm and food, it's still pretty good diversity within that. It's not just, you know, crops in the ground. That would be maybe more risky. So we spread the risk a little bit.
Steve Waddell, over to you.
Thanks so much, Michael. I'm in Berkshire County, so just next door. There's a couple of questions I have. One is just about the role of regenerative agriculture. I work with a global community, and they're very focused upon new forms of financing from a systemic investment perspective. And it's framed often as a transition from conventional agriculture to regenerative agriculture. And I'm wondering if you have how that figures into your thinking about maybe you'd only lend to particular types of investment, or whether that figures in at all. The second question is, as you might know, the Netherlands, which is a very small country, is the world's 4th largest agriculture producer. And one reason for that is because of the way they support family farms. And there's a whole range of mechanisms to support the operation of family farms and the transfer, what you were just referring to, intergenerational. And I was wondering whether you ever get involved in those types of issues as well. Thank you.
Yeah, so as far as, you know, how we want to support regenerative farming practices, you know, one of the main criteria that we're looking for any borrower to have access or to be eligible to access PVGrows funding is demonstrating a positive impact on the environment. So, you know, if a farmer says in their application, I practice regenerative agriculture, that's, you know, what we want to find out is what exactly those practices are. And so that is basically doing those practices is a really huge, you know, nod in their favor for accessing these funds. And yeah, I don't think, as far as how we support the intergenerational, handover farms, I think that could, as I said, our funding is available as part of perhaps a larger deal of, if there's a farm purchase. Our loans, the max loan is 250,000. So usually that's not going to be enough to, purchase a farm, but we work pretty closely with other lenders to make ours just be, part of a deal.
Okay. Let us go finally to Helene.
Hi, my internet is a little glitchy. Can you all hear me?
Yep.
Okay. So I'm in New York, in Ulster County, just north of Kingston, and I work on different types of community-based projects to do with funds. And I've been looking very closely at your project and others. We've been doing a lot of research and compiling information to be able to support projects here in the Hudson Valley of New York. And what I've been noticing with sort of any type of fund that has a mission-based approach, so regenerative agriculture, falls under that, is this demand for a mixed fund that is able to give loans, certainly, but then also grants. And mostly I'm seeing the demand for grants amongst projects that are emerging. Just like when you all emerged, you had foundation funding.
Mhm.
So I'm wondering if, maybe in your region that already exists, so you don't need to do that, or if you've been pondering doing some kind of hybrid fund where you would be able to give out grants.
So, I can tell you back before COVID, we were a business lender. And so we said businesses don't get grants, nonprofits get grants and this and that. But during COVID, obviously a lot of people were struggling and the government put out grants and foundations and everything. So, and then we actually saw that, hey, this is actually pretty useful for a lot of, especially under-resourced folks, people who didn't have wealth built up. So we are trying to figure that out. And we do have two other programs. We have USDA projects at the Franklin County CDC. So sometimes we're able to use some of that funding, whether it's for the technical assistance or an actual grant to get them, usually $5,000. It's not big ones, up to $5,000. And then some of our partners, whether it's the Department of Ag or CISA also, they have some grant funding. So we do try to pair that sometimes.
Okay.
Sometimes they need a small grant to get to the next step, and then they might be able to take a loan, or
That's right.
in conjunction with a loan to keep their debt down. Maybe they need 25,000, but if they only needed a $15,000 loan instead of 25, that's going to help them, keep their payments down. So we do see a value in it. I think it's a little harder to an investor. I mean, then you're going to the contributors and the donors versus investors.
Yeah, right. No, this would be like a different fund,
Yeah.
but it seems like you're able to access that through partnerships.
Yeah. And some of my board of directors at the CDC was worried, if we start the PVGrows fund, are some of our traditional donors who donate to the
Right.
CDC going to invest instead of donating? It's been the opposite. Some of our investors have become donors to the CDC.
Oh, that's interesting.
And so people want to invest their money, but some of those people have cash who they want to make donations. So I think it's growing the pie. It's not, moving it from one pocket to the other, I think.
Thank you.
And I do want to, I think your question about an emergency fund, we teamed up with CISA. They were doing these $5,000 emergency loans. They've been doing that for a while. We paired up with them, and now we can do up to $25,000 emergency loans. And so it's a quicker process. It's when there was a
Okay.
floods here last year in Western Mass
Yeah.
and Vermont. We made a bunch of $25,000 emergency loans, a lower interest rate. I think the first 6 or 12 months was no payments, so we made really,
And
flexible.
that was using your same pool, or was that a different pool of money?
No, that's using the same PVGrows
Okay.
pool, and we told our investors about it, and they thought it was great. So
Great.
So I'd like to squeeze in just two more quick questions. And one is, Joel, if you'll let me call on you. for a second, because at the being involved in the Fair Food Fund, you have a fairly unique perch looking at funds like this and initiatives like this across the country. Where does this fit into the landscape, do you think?
Good question. I mean, I think what we, and I'm gonna shooting from the hip here, Michael. But I think there are a handful of national focused funds that are focused on regenerative ag and food systems kind of at a larger scale. And then there's, I don't know of too many that are like the PVGrows Fund, in that its unique focus on the geographic, fairly small geographic area. But I think that there's a kind of play between these smaller funds and the bigger funds that we probably need to find ways to do more connection. And I say that knowing that that's hard, that connecting the larger capital players with a smaller community CDC takes an extra level of effort. You know, we've had in New England, John was a part of it, you know, this group that the Community Loan Fund, New Hampshire Community Loan Fund, gathered a bunch of people together at some point, but that's kind of fallen apart, and that just took a lot of effort from the Community Loan Fund. But I think there's ways that we can work better together, but there's a challenge in that we all have our own goals and all have our own missions. Even though they're very similar, they're also unique in that what we're trying to achieve. And I think having a place that we can do a better job of knowing who to go to is something that I think the greater food system network is working on. I think, John, you've been a part of the Food Lenders Network a little bit. That's a national, kind of led by Self-Help and some others. I don't know if that helps or not.
Oh, it's extremely helpful. Again, just what we're talking about is sharing this information and not starting from scratch. And I know there are areas who don't have these things. And, you know, this kind of gets Jasmine's question too. What do we see the future is, you know, we could double the size of this, triple the size of this over the next 10 years. But our question is, do we want to also expand our geographical area? Or do we just help other people start these in other areas? And so we could see both being beneficial. I think there is something, we do have a bunch of investors from like the Boston area who are supporting our fund. But so I think there is something though about local investors being able to go to the restaurant that serves the local food that they're invested in, going to the CSA, seeing the farm as they drive by. So that localness, I think, is important. But, you know, regional is also there too. So, and then the other thing is just really keeping a focus on the under-resourced folks. Like we like to say, you know, people who don't have a rich uncle, like we can play that role a little bit. We don't need the collateral. We don't need credit scores. So trying to build wealth for people who don't have it. And, you know, land is a huge way to build wealth. Businesses, farms, that's a huge way to build wealth. So we really want to be able to contribute more to that. And I think, you know, the fact that we've had one write-off in is their 9th year is kind of incredible. And in one way, it tells me maybe we're not doing the best job. We need to sort of take more risk. So you know, I'll tell our investors in 10 years, we probably have a higher write-off rate, but it probably means we might be having more impact as well. So that's where we need the investors to stick with us, even if that happens.
Great. And let's shoehorn just a last comment from Nicole and we'll wrap it up.
I just wanted to point out, we had Boston Impact Initiative in this group a couple weeks ago, and it was super interesting that they were talking about their community investments actually having a higher return than some of their accredited investors or otherwise, because people in the community were taking, risk with even small funds and other things. Like, obviously the loans that the returns on the investments are pretty low, right? Did I see 0 to 2%?
Right.
So do you think differently at all about the community, smaller non-accredited investors in this? And do you think you'd get more interest if the rates were higher? Maybe that's not your function. I think we're all trying to struggle with how do we have, low interest rate funds in a world where 5% is a norm, how do you tackle that? Sorry if that's a bigger question at the end than it's intended. I can follow up elsewhere.
But our big push, and I think we all need to do this, is the value is not just the financial value, it's the personal value, it's the meaning that goes behind it. And how do we put that into better words and express that? Because especially for a small investor, $1,000, whether you get 2%, 3%, 4%, that's not a lot of money. So it's really, what's the meaning to you in your life? That's the most important aspect of these investments, I think.
It's the social rate of return.
Yeah.
Right. Michael, I just want to interject before we close. The systemic gaps that Joel and John talked about are probably worth another call to go further into why this is different and what keeps it from happening other places. That's an interesting follow-up. You guys expect a call, and Nicole, I'd love to have you in on that too.
Yeah, I agree. And I know a number of you on the call, like Helene, are thinking about this issue of like, what is the right economy of scale for doing this? And maybe setting up a zillion funds across the country is not the right approach. Maybe John and Hannah, we should get Cape Cod to become an appendage of you and figure out what is the right relationship and spread your legal and accounting costs over more activity. We are trying to be very mindful of people's time, and we want to thank Hannah and John for sharing with us what they have accomplished, which is remarkable with PVGrows, and wish you luck going forward. We want to thank the rest of you for coming and sharing your time with us today. And just to let you know that everyone attending here will get an email from us shortly, and the email will have a bunch of links where you can listen to this, where you can share it with other friends. We'll also have listed what the next events are, and just to tee them up, our next event will be the Ujima Fund in Boston on September the 25th, which is a remarkable fund. And then on October the 9th, we'll be talking with the New Hampshire Community Loan Fund, which has been operating for more than 25 years. And then we'll talk with a newer fund on October the 23rd, Ignite Capital, which is in Baltimore. On behalf of the sponsors, Mindful Marketplace, Neighborhood Economics, Main Street Journal, and Impact Alpha, I'd like to thank you all for attending. And wish you a great day going forward.
Thanks very much.
Thanks.
Thank you so much.
Thanks, everyone.
Have a good day.